Hey guys, Mike here. So, boy, what a day on Friday, and we talked about all this news we're going to be getting, and boy, did it cause a roller coaster effect in the market, just like we figured it would. And a lot of people would ask me, hey, what the heck happened to yields in the market? And I'll explain to you there was news coming out, which dropped yields, and then there was a piece of news that came out, which nobody really noticed, that spiked the yields and sent the market tumbling. And so we'll talk about that and everything. Also get into some other stocks like Nike. Whew, I know the swish is supposed to be like this, right? I think I need to turn that thing upside down. Oh my goodness. That thing is radioactive right now. And we'll look at, maybe where it's going to stop, maybe at bottom, but I'll show you something to pay close attention to just in case you're into that one. And also, we'll go into the charts, look at what we're looking at this week coming up. But I'm also going to let you watch a little clip of a video I did for the members a couple weeks ago, setting up for July, because we're coming into July, done with the second quarter, rolling into the third quarter, and you might be very surprised at July statistics. Okay, it kind of surprised me a little bit, and so we'll see. I'll let you get a little listen to that in this video as well. And getting into some of the data here, as we talked about, if core PCE comes in as is or under, the market's going to rocket, and oh boy, did it. Now this here is our spending. Spending ends up rebounding. The market didn't really care about that. Core PCE, of course, coming in as is and everything. You can see that at the bottom. And when you look at spending, you kind of look at this and go, look over to the left. That's 2020. Oh my goodness, right? 2021. But what do you see really more than anything else? It still is shrinking, right? That's the thing I noticed. This slowdown is happening when it comes to spending and stuff. It depends on what we're actually buying. And according to your comments, you were cutting back as well. We've done the same. And again, not on everything, but it seems to be common, right? You look at inflation expectations. This is the 5 to 10 year inflation outlook coming down quite a bit. So that is a good thing to see right there. And that's, positive sentiment for the market, if you want to say that. And it's gotten back to a normal level, as you can see, going all the way back to the 2000s. And then you go over to consumer sentiment, and you can see, obviously it contracted down quite a bit on Friday's report. But when you look overall and you look at when we go into bull runs for a longer period of times, it's an up channel, right? That's what's happening. We're going into obviously crashes, everything else like that. It's a down channel. Everybody's mad. So obviously it went down on Friday, but when you look at overall, starting back right there in around like 2021, 2022, this is an up channel, right? It looks just like a stock chart. It's just staying in that channel, bouncing up and down, up and down. So we should get a bounce next month. But as long as it stays in the channel, you can see every time on the other times it's done this. May take time, but it continues to trend up. That's a good thing for the overall market, okay? That's why you've seen the stock market move up over the last couple of years, right? And then there's this right here, which really I don't think has anything to do with the stock market, but honestly, when you look at it, this is the election odds. I don't know if you guys watched that debacle of a debate the other night, but when you see it, Biden's hopes, way down, especially in the bet knowledge, right? Republicans, Trump's way up. You can imagine why. And understand when I say that, the market don't care who gets elected. I'm telling you, certain stocks and sectors do. I'll probably do a video on that. I was talking to somebody about solar stocks the other day, and you can plainly see when you look on a chart most time when they do better, right? And then when these stocks over here do better, but the overall market don't care. Okay, there's recessions, there's crashes, there's super bull markets under Republicans and Democrats. Don't matter. Okay, just remember that overall. But I will ask, is if you want to put in the comments as a side note, if you did watch the debate, what were your thoughts? Just very curious to hear your thoughts and stuff. Now, you saw yields drop, right? When we got PCE out, boom, fell. Here comes everything going up. Yields drop. There it is. Oh my goodness, drops to 1.1%. And then all of a sudden, at around 9:45, it says, see you later. And it just skyrockets. And IWM right there, if I can type it in correctly, says, I will see you later too. It just drops. Look at that. Bye-bye. Okay, it ended up going red. I think it ended up, green for the day, and we'll come back. But it just, major shift down. Okay, and then of course the Q and stuff I rolled over, which we'll look at. What happened was Chicago PMI came out, and look at how much higher it was than expected. 47.4 versus 39.7. Don't sound like a lot, but look at this. We have missed Chicago PMI forecast 1, 2, 3, 4, 5, 6 times. We haven't been above it or even hit it since November 2023. And that was a big move too, right? And so all of a sudden yields said, wait a minute, that's strong. So what it wasn't even that great. It's just that like new orders didn't go, decrease as fast, and employment going down didn't go down as fast, and that kind of stuff, right? But again, it just shot the yield shot back up, right? Because it was good for the market or good for the economy, and the market said, oh, we don't like that very much, right? And you can see here's the Qs. It goes up, and we're like, man, look at this right here, going for all-time highs, though, and we actually hit all-time highs, and then boom, rolled right over, went down 1.41%. Ended up red for the day. That was crazy, right? But when we go back out here and look on the daily, you can see we made a new all-time high, right? It was like an intraday high barely, and then rolled over like everything else. But then, when you look here, of course, what do we got? High, low. Couldn't close a higher high, right? Thought we were going to have a higher high for the day, but we didn't. We closed down over here, right? So all of a sudden now, is it the lower high? That's what we got to see. It can pop up Monday, skyrocket right back up. Don't have to roll over, right? But obviously, if we do roll over, the target really is going to be right down here at that midline, which has a lot of confluence if that's what happens. Understand, in this video, you're going to look at July as far as what happens in July to the Qs, to XLK, and even to the S&P. And so this maybe or probably won't happen. We'll see. But again, the confluence, if it does happen, right there, you're sitting there in a discount window in those fibs in the golden pocket. You got the 21 EMA right there, or SMA actually. And then you got that midline, right? So that's a good confluence for a bounce if we start to sell off. And to show you how potent the midline of a channel is, you can see right there, the S&P hit it to the penny. Hit it and boom, sold right on off. It could not get above it, not even 1 penny above it. And when you look at the S&P, when we start trying to pull out on this one, you can see right here, there's that 21 EMA. There's a nice area to try to come down, get liquidity if that's what it's going to do and stuff. So we'll have to see, is it going to roll over now or is it going to wait? Again, we'll see. You got a short week next week coming up, which we'll talk about and everything. But, this is another one where we did get a new all-time high right here. Some people might even try to call it a double top because it's pretty close to that one, maybe as well. And so you just got to watch it. You got to watch, see, is that right there? If it doesn't move up Monday, is that going to be a lower high technically and then start to roll back over and set a lower low? That's what you're looking for. And so there right there will be the first draw, right? Maybe we get rid of that daily fair value you got first, okay? Nice draw on liquidity. Or do we continue to come down? Or do we just start skyrocketing up the first couple weeks of July? That's what we're going to have to kind of wait and see because, again, we'll have a lot of news coming out next week, even though it's a short week, and I'll show you what I'm talking about. Even Papa Jerome Powell is speaking next week, for crying out loud. And then we go to some of the stocks here. Tesla, you can see we talked about that gap fill, right? Went right up in it. No problem. Loves to fill gaps and then loves to sell down. That's what it loves to do. Does it all the time. And you see those wicks right there on those hourly candles. It was like, I don't know about this one. And boom. Sold back off. Went ahead. This gap's filled down. Came back down to support. Got a bounce right there. And really what you're looking for Tesla here, if you're a bull, testing down there about 1.5% down that trend line again and then getting a bounce and start building out some structure would be super bullish for this if that was the case. Again, this could be a summer move for Tesla. Again, June's the best month, and it did end up nicely, right, for June. And so I think it was at, 7% for June now, or 8%? And so you can see that right there, finally breaking above. And that's really what you want to see if you're Tesla, but you just want to see that trend line hold. But I'll tell you this, if it moves up, watch the 200 moving average right there. That's going to be your next line. It's going to be super resistant, right? It's been in the past multiple times. It's been support multiple times in the past. So the 200 is a big deal on the daily time frame. So make sure you watch that. It sets right around 206.30. And so watch that level again. It moves. So of course it's going to be coming down to meet it. So anywhere from like 205.50, 206.25, somewhere in there. Will probably be your range depending on how quickly it gets up to it. So again, it's a moving average, hence moving. And so keep that in mind and just watch for that trend line to act support. Now snow again, another third green day, even though the market did sell off. Again, that trend line is going to be the big one. If it breaks above that trend line, it could have a nice big move to 150 up there. And so we'll mark out like places where we think it's going to grab liquidity at. You see some nice daily fair value gaps after this huge move down. These kind of levels to watch for a reaction. You should get a reaction. If you don't, it just cuts right through it. Again, that is super, super bullish. And so we got quite a few of them there. So we'll watch that and see if this continues to get momentum. It's another one of these beaten down software companies, been hot garbage. All right, and so now it's getting some love. Now you look at Nike, woo boy, swish my butt. Oh my goodness, swish down. That was, the earnings were horrible, and that thing just cratered. It was one of the few stocks like this that did not get the bounce. And of course, if you saw the earnings, you know why. But again, where are you looking to go on this? A lot of people are targeting 58 because that's the bottom of 2020 right there, which would be crazy. Another 24% move. That's probably wishful thinking. But again, I'm going to show it to you just because, it's on the chart right there. But something to watch for on Nike, right here you can't see it. I'm going to show it to you. There is a gap right below where it is at right now. There it is. Here we are on the daily time frame. You can see that gap right there. I'm going to mark it out and we'll draw it over. And there it is below us right now. So anywhere from 68 to 72, I believe, is when it would close around 68. But again, it just trickled down, finished up 20% down. I hadn't even hit that gap. Don't mean it has to hit the gap. I know people that are DCAing in right now, but I'm just making you aware of it because you know gaps can be magnets, especially with this much selling pressure. And it is Nike though, so people will DCA into this one. There's no ifs, ands, or buts about it. So lastly, before we get into all the data that's coming out, there's going to be a whole bunch of economic data, including Jerome Powell speaking next week. I wanted to at least show you a snippet of this right here. And let me scroll up here real quick and you can see basically this is going to cover July seasonality, which might surprise you, so pay attention. Looking at July seasonality is pretty strong here, guys. On the S&P, you can see, and I like to go back, not over history, but the like last 10 to 15 years and stuff. This is the last 10 years. You can see July is pretty strong. Okay, even on the S&P, it is strong. And of course, for it to be strong, we need semiconductors and we need big tech, Microsoft, Apple, all those companies, right? Then you look over here, XLK. A beautiful trend here, positive return in July with no losses over the last 15 years and an average return of 4.6%. And I did verify this on XLK. This is true. All right, so what's XLK carry? Those big boys. We've been talking about how NVIDIA might be taking Apple spots. You got Apple, Microsoft, NVIDIA. Apple and Microsoft have made up 40% XLK for the last probably 15 years, right? And so even if NVIDIA takes a spot, you'll still have Apple at 4%. So you have like almost half the freaking XLK ETF is 3 stocks. All right, so if those do well, then you can see it. And it's 100% in July so far. Then you go over to QQQ and you go, oh, okay, well, look at this. 100% for the QQQ. Going over, I believe this is the last 10 years, and we're going to scroll down. You can see this, but that's 100% return right there. And, you know, we'll go over the percentages right here, but I'll tell you this, the bigger numbers are either bear market rallies or we're just coming out of some kind of nice pullback, like that 12.8% in 2022. But you can see the percentages, roughly 4.9 is the average, but let's say 3.5 really. And so, you know, that kind of tells you. So now we got XLK, we got S&P, we got QQQ, looking really good, and 2 of them with 100% and 1 of them with a 90%. And here's the other thing to remember. We did the video on sell in May, go away is dead versus like sell in August. And you can see when is the topping month, okay? So the 1 month peaks, 24% of the time the NASDAQ 100 peaks in July. For a 3 month peak, which I think is kind of like we did last year, about 12%. So this is something to watch out for. We get this last hoorah up, and it's usually at that last week of July you got to be kind of careful, okay, where it starts to really start to sell down and stuff, because September is the worst month of the year for the market anyway. And so that's something to keep in mind. But I was really surprised and confirmed, like this data, that July was that super strong, with especially 100% over the last 15 years for XLK, and I believe the last 10 years for the QQQ, which is kind of surprising. So it's rare you're going to see any ETF 100% in 1 month going back 15 years be green. That only means if it opens up at 100 and it finishes like 101, that's green. The percentage sucks, but it's green. Okay, but I went back and looked at it, and went and looked at the Qs and the S&P to confirm all that stuff. And as I showed you in there for some of that stuff, and so that's, you know, that's what we got going on. Is that going to continue? And usually the first 2 weeks can be pretty bullish. It's really the end July is where you got to go, ooh, especially for semiconductors. You go, ooh, you know. So we got to see. We got to see what's going on here. So let me know what your thoughts on that is. Now, last thing here, looking at what's coming out next week, and it's a lot. You're going to have final manufacturing PMI, ISM manufacturing PMI, ISM manufacturing prices, construction spending, right? Tuesday, you're going to come out with the Fed Chair Powell speaking. I don't know what setting that is. And the JOLTS job report. Then on Wednesday, you're going to end up with ADP employment changes, unemployment claims. Then you're going to end up also on the same day, final services PMI, ISM services PMI, factory orders, crude oil inventories, FOMC meeting minutes. So watch out for that one for sure. Then Thursday, we are closed for bank holiday. Then Friday, you're going to have average hourly earnings, non-farm employment change, unemployment rate. And so just buckle up for another volatile week. There's no doubt about that. That's what's going to happen this week. It is a short week, so maybe you're seeing lower volume with the 4th of July holiday and everything. We'll have to see what happens. But anyway, no surprise there. My job is to obviously give you the information. So maybe seasonality works out in July. Maybe it does not. We'll have to figure it out. Again, we're in a presidential election year here, so sometimes the seasonality differs. But anyway, hope you guys got something out of it. Please hit that like and subscribe button if you did. Really appreciate it. Feel free to sign up for the membership. Less than a McDonald's combo, $7.99. Can't beat that anywhere, and you get a lot for it. So anyway, hope you guys have a great one, and I'll see you tomorrow.